The investment fund illusion. How one man fooled millionaires with a high-rise office. In the world of financial fraud, the most convincing scams rarely begin in dark alleys or anonymous emails. They begin in luxurious offices with polite receptionists, glossy brochures, and persuasive smiles. One such story unfolded in Los Angeles, where a single fraudster built a mirage of wealth and credibility so convincing that even seasoned investors fell victim. His operation became a masterclass in psychological manipulation, proving that appearance can be the most dangerous form of deception. The birth of the illusion. The scam began with a simple idea: to look legitimate at all costs. The fraudster rented an entire floor in a downtown Los Angeles high-rise, a space normally reserved for law firms and real estate corporations. The view was spectacular, the rent was enormous. But to the scammer, it was an investment in the illusion of success. He hired temporary staff through agencies, receptionists, assistants, even a few analysts, to fill the space and make it look like a thriving financial firm. Most had no idea what was really happening. They believed they were working for a promising new investment fund. The office decor was carefully curated, framed stock charts on the walls, fake Bloomberg screens on monitors, and glossy brochures touting international investment strategies. Everything about the environment whispered legitimacy. To any visitor, it looked real. It felt real, and that was enough to make people believe. The sales pitch: selling sophistication. Once the physical illusion was established, the scammer began inviting potential investors, mostly wealthy business owners and retirees, for meetings. The setting alone inspired confidence. Sitting in a glass-walled boardroom with skyline views, investors were shown client portfolios and fake return reports suggesting consistent double-digit growth. Charts, spreadsheets, and testimonials reinforced the illusion. He spoke confidently about diversified global assets and exclusive opportunities not open to the public. The language was sophisticated, the tone calm and professional. And to seal the deal, he would drop names of other investors supposedly already involved, often respected figures in the community who were never actually part of the scheme. Each meeting ended with the same result: another check, another wire transfer, another believer in the dream. The psychology of the scam. The success of this operation wasn't luck. It was rooted in psychological strategy. The fraudster exploited several key cognitive biases that influence human decision-making. Authority bias. The upscale office and professional demeanor made the scammer appear as an authority figure. People are naturally inclined to trust those who look successful and knowledgeable. Social proof. Mentioning other supposed investors created a powerful sense of validation. If others had trusted him, it must be safe. The halo effect. The polished image of the company made investors overlook inconsistencies. Expensive surroundings translated subconsciously to credibility. Greed and FOMO, fear of missing out. Promises of high returns and exclusive access triggered emotional decision-making. Investors feared missing out on a rare opportunity. These biases combined into a perfect psychological storm. Even experienced investors who prided themselves on due diligence were caught off guard by the emotional comfort of credibility. The unraveling. For months, money flowed in freely. Each investor was told that their funds were being placed into overseas equities and private ventures. The scammer sent out fake account statements showing regular gains, reinforcing trust. But behind the facade, there was no fund, only personal bank accounts and offshore transfers. Eventually, one investor grew suspicious when withdrawal requests went unanswered. A quiet investigation began. When authorities finally arrived at the glittering downtown office, the truth was exposed. The once busy floor was empty. Computers were gone. Staff had been dismissed weeks earlier. The scammer had fled overseas, taking more than $10 million in stolen investments. The high-rise office, once a beacon of success, was nothing more than an expensive prop in an elaborate play. Why even smart investors fall for it? You might wonder, how do intelligent, wealthy individuals fall for such an obvious scam? The answer lies not in intelligence, but in emotional trust. High net worth individuals are often targeted because they have the funds to invest quickly. They're used to being approached with exclusive deals. They value face-to-face professionalism and physical presence. The luxurious office serves as a psychological anchor, a tangible reassurance that the company is legitimate. It lowers skepticism and replaces it with admiration. In a world where scams often happen online, a real office with real people feels like proof of authenticity. That's precisely why it's so dangerous. Modern variations of the same scheme. This kind of luxury office illusion is not unique to one case. It's a recurring pattern across different sectors. Crypto exchanges, pop-up firms rent impressive offices to attract investors during token launches, then disappear once wallets fill up. Real estate investment trusts, REITs. Fake property funds use short-term office rentals to lure retirees into investing in non-existent developments. Consulting and tech startups. Fraudulent companies create a facade of innovation, collect client retainers, and dissolve before delivering anything. Scammers have learned that in a credibility-driven world, optics equal trust, and trust equals money. How to identify the illusion? Verify registrations and licenses. Any legitimate investment fund must be registered with financial regulators, e.g., the SEC in the US. Check the company's age and history. A brand new global investment firm with no verifiable track record should raise concern. Ask for audited financials. Real funds produce audited statements verified by independent accounting firms. Inspect the people behind the brand. Research the founder's professional background. Scammers often use fake names or exaggerated resumes. Be wary of exclusivity. Scammers love phrases like limited opportunity or private placement. Urgency is a classic red flag. Drop by unannounced. Visiting outside of scheduled appointments can reveal if the office is genuinely active or staged. Protecting yourself and others. If something feels off, it probably is. Investors should consult independent financial advisors before investing. Demand written documentation and confirm all claims with regulators. Never let luxury or location override logical verification. Most importantly, speak up. Reporting suspicious operations early can protect others from becoming victims. Conclusion: the power of appearance. The Los Angeles Investment Fund scam reminds us of a timeless truth. Luxury can be manufactured, but trust must be earned. A glittering office, designer furniture, and a polished team are no proof of honesty, only of presentation. In an era where deception can be dressed in a suit and tie, the most dangerous illusion is the one that looks legitimate. Before you invest, ask hard questions, verify every claim, and remember, the line between a successful firm and a successful fraud can be as thin as a pane of high-rise glass.